Is this it? Are the lows in for gold? In today's video, we're gonna look at the weekly charts of gold and of the four main factors that are influencing the gold price. One of them just turned and got real positive for gold. But the other three, man, if things go against us on the other three factors, gold could be in a lot of trouble. So let's take a look at the weekly charts and see where we stand. Let's get into it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month.
Welcome to Hot Trades of the Day. My name is Daniel Wami. I want to jump right into it. What you see here is the chart of gold spot on the weekly candlesticks. So the week is over. What a week it was. Hallelujah. Monster down move, waterfall sell-off, as I had predicted in the past weeks leading up to this week. If you missed those videos, hit the subscribe button so you stay ahead of the markets. But then the reversal happened, coincidentally happening with Trump announcing that a peace deal with Iran is imminent. Coincidentally, that tweet happens the day before the SpaceX IPO. You draw your own conclusions. So let's get into it. Let's look at the gold chart on the weekly and the question that has popped up after the rebound in gold and in the mining stocks. And we're going to focus on gold today, not to make this video too long because it's a beautiful weekend. You have better things to do. And then we're going to do silver on Monday. So let's get into it. Let's start this way. There are really four ways how a correction ends. The one that most investors want to see is called a V correction. It goes like this. And let's make this all black so you're not irritated by it. So this is that's the one that most investors want. A steep sell-off, similar to this one, right? Waterfall sell-off, reversal candle, which by the way will become important in a minute, and then you rebound. That rebound was weak. That was the first warning sign that something was not right. The next one, which is the one that every technician wants, is the W, which goes like this. So we make a low, we go up, then we retest this low, and we're either going to be at the same low or a little higher. So this has to be the same low, so let's go like this. Okay. Or it's going to be a little higher. Same thing. Yeah, very popular. That's the one that all the technicians love. And that's the most famous one because that gives you the most certainty. So the V correction and recovery is the rarest form. That's the one that everybody wants and dreams about because you're going to get in super cheap, but it's the rarest form. The probability that it happens is the lowest, and the reason being is that only happens if the market gets caught completely on the wrong side. So if something extraordinary happens that leads the market to push to one side and then realize very quickly, oh, whoa, hold on, things are completely different, and then it reverses and jumps back up. And let me give you an example, and this is just an example. Let's say there's news that the airport control has lost contact with the private plane of Elon Musk. During trading sessions, Tesla stock and SpaceX stock would drop 20% within minutes. All the algos would just pick up Elon Musk, lost contact, private plane, sell. We see the crash. And then you get all of a sudden like a phone call from Elon Musk calling into live show about the stock market and saying, hey, everything is fine, we just hit like some turbulence, everything is okay. And then the market would rebound immediately, understanding, oh, what we just priced in did not happen. That's a V correction, right? So fundamental facts that get misinterpreted, fundamental facts that turn out to be fake, or massive, massive emotional panic selling for some reason that then gets reversed as well. So that's rare. The W is fantastic. That's the formation that, again, every technician loves, because you see the second leg lower, and then you can just watch the lower time frames. If you're a swing trader, 4 hours, an hour, and you can see, oh, the old low is holding, we're forming a second bottom here, or a little higher, we're forming a bottom, and then you can start adding positions. So because that is so popular and everybody wants it, that does not happen so often in this clear of a form, because the market will not give us what we want. It will always try, remember this, to screw the most people out of their money. So the next possible bottom, that's the nasty one. That's the one that I expect to happen. And that is the undercut. So it looks like the W, low, recovery, low, but then it does not stop. It undercuts the previous low, freaking everybody out, thinking, oh, we're going lower. But then it reverses, and then we go up. And then the other one, obviously, is kind of like the U that goes like this. And what's really nasty is the sideways, which is basically you make a low, and this is my second favorite scenario that we're going to see. We go up, then we go down a little bit, and everybody says, oh, it's going to be a W, it's going to be the fake out W, but then we kind of just go like this. And we grind sideways, and we never really make a new low. And it just destroys potential investors because they never buy. Because they always see the short moves down and say, now we're moving back down to the old lows. And it never happens. So what is the scenario that's most likely? We already talked about the V scenario is extremely unlikely. And we see this, and that's why we look at the weekly charts in this weekly candle as well. We made a new intraday low on the weekly and on the daily, obviously, too. We made a new low on the close on the weekly, below the uptrend, below the 50 weekly, which is an important line, this purple line we're going to talk about in a second. And as you can see, if we scroll back, this is the lowest low on the close, on the weekly close, since December. So the 6-month low on the close, that is significant, right? For example, last time we had this waterfall sell-off and we had this reversal candle, this low was much higher than anything we had seen in December. And the 50 weekly, as you can see, has been with us. It has been very, very good for us because it basically, if you just use the breakout above the 50 weekly, you got in fall, winter 2023, even before the breakout to new all-time highs. This is where you would have gotten in. And you can see breakout, retest successful, and then the party started. So the 50 weekly is significant. We're fighting with it right now. And again, as I said, I like the scenario the most because it would bring the most pain to the market if we drop below this uptrend, if we drop below the 50 weekly, if we drop below 4,000, and we do something like this. But we do not go down to 3,500. So that would bring the most amount of pain because all the people that are bullish but not euphoric, they have all their orders down here. And they see the breakdown below 4,000 and they say, aha, now we're going down to 3,500. They're going to have all my orders at $3,510 because I'm super smart. And we never get there. And at the same time, we get all the stops triggered that are at 4,000 or right below it. So let's say like 3,900. So we drop below, let's say like 3,800, 30, 40, 50, whatever. Trigger all the stops, liquidity grab. Then the market reverses. None of these people are going to get back in right away. And everybody gets screwed. That's what Wall Street loves to do. So that is the scenario that I'm kind of looking for. So, and the reason why I do not think that, and let me put this away here. I just wanted to show you this. That this here is, the bottom is, again, weekly close below the uptrend, weekly close, but it's tight below the 50 weekly. Not confirmed yet. But the real reason, this is not a reversal candle. For a reversal candle like this one, which ideally finishes in the green, doesn't have to, but ideally looks like this, or ideally looks like this. So a really long tail, and then we finish strong in the top 25% of the candle. That is the important part, which was the case here, which was the case here, which is not the case in this week's candle. The gold price was not able to finish in the top 25% of this week's candle. Even if it would have been red, that would have been okay, but that did not happen. So I can see that we're going to rebound a little more short term. Boy, ideally we would regain the uptrend, which would really fake out people, and then go lower again. And that leads us to the other factors besides sentiment and the technicals of gold that are influencing the gold price. And that is the big problem that I see with a lot of the analysis on YouTube when it comes to gold. I don't watch that many, but I try to take a look, see what they're doing. You know, we always need to learn and need to improve. I mean, especially me. How smart can I possibly be? And they're just looking at gold independently of the factors that are strongly interconnected with gold, and that is, first off, the dollar. Now, the Dixie doinked off this resistance zone, but if we zoom out a little, and please ignore this arrow, I can show it to you. It's the long-term analysis. If you follow this channel, you've seen this before. If not, hit the subscribe button so you don't miss any of these videos. It's the ultra long-term downtrend of the dollar, the depreciation of the dollar, which is the reason why gold will go much higher. So this is what you see right here, this up move of the dollar, which is in its final stage. Either way, if we break down below this uptrend now, or if we go a little higher, doink off this upper end of the downtrend channel and then go lower. Once we break this uptrend, the floodgates are opening. So this is where this arrow comes from. So you can ignore it. Here's the weekly. And here's where things get interesting. This is a very, very constructive base on the weekly, above the uptrend, no doubt about it. And even more so, yes, we are right at this resistance zone, right? Which has been the kryptonite for the Dixie. Doink, 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 and now another doink this week. But look at this. We are above the 50 weekly now, right? In this first 2/3 of this bottoming formation, we were below the 50 weekly. This has changed, and we can see this already, right? This second, third of the consolidation, if this is really it, is already higher than what we have seen here, right? The highs of the previous 2/3 of what we've seen so far are lower than this. On average, they're somewhere around here, right? In this basically this purple red zone. And now you can see there's somewhere here to here. We already see the lows are getting higher. We are above the 50 weekly. So can we go lower short term? Sure. Could we retest the 50 weekly? Sure. More likely is that it would be something like the purple support zone now, or this yellow zone, which is not that important, but for the shorter terms, like the next weeks, important, works. So a small pullback, which would then make sense, right? Would make sense that it would move up the gold price short term. But man, if we break above this resistance zone, as I pointed out before, the Dixie is going to go between 103, 104, and that would put serious pressure on gold. So we need to factor that in. Factor one, risky for gold. Factor two, oil. This is the big one because I told you before, this is the domino and this one looks good. As you can see on the weekly, breakdown below the sideways trend that we have been in since March. And if this holds, we'll see next week, then that would definitely open up short-term downside potential for oil. This is WTI to this support zone where we also have the 50 weekly. So let's say 75 to 77, 78. So another 10%, 8% in oil, which again would then ease the rate hike pressure. That's why it's the domino, right? Increase the possibility of rate cuts, which will also then help to push the dollar down short term. So that is the big news on the weekly, the biggest news actually on the weekly. That is pro gold. That looks really good. And the last one obviously is the bond market. So let's look at the bonds, 30 and 10. Just to give us an idea what's going on over there. And as you can see on the weekly, same thing. We doinked off the resistance zone, but we zoom out and we see, man, I mean, betting against this breakout, risky. We clearly see that we're making higher lows already. We break above this resistance zone. I've shown this in a previous video. If you missed this video, then hit the subscribe button so you don't miss any of these videos. As I've said before, that would trigger a big move up in rates. That would trigger a big short-term move down in gold. So going all in on gold right now and saying this was it, this was the bottom, you're playing with fire there. This is the 10-year, this is the downtrend. Again, it held. So far, could turn out to be a bear trap, but again, nothing really has changed. This could change in a couple of trading sessions, and it goes pretty similar to what we see in the 30-year, which is, man, there could be a big move that could be problematic for gold. So my strategy will be to wait out this recovery. There is no reason to think that this is a V-shaped recovery because we do not have that big one fake event. Neither, we had very negative sentiment for gold and for silver. By the way, silver looks way better on the weekly. Watch Monday's video, highly recommend it. Hit the subscribe button so you get notified. But we didn't have panic in gold and silver. So V-shaped recovery, highly unlikely, which leaves us with, are we getting a U shape or are we getting any type of version of the W, including, as I call it, the grind? Either way, we're going to get another move down after the recovery. We will see how low, right? Will it be a big new new low move, or will it be a smaller move in the grind way, which let's say gets us back to 4,200, 4,100, right? Maybe these lows. And that's it. And then everybody's like, we're going to 4,000. This is happening. We will see. But either way, that should give me a chance to then get in on the long side once I see, okay, we are not going significantly lower. We're not going to 3,500 because of what we see in oil, in the Dixie, in the bond market. Will I then hit the absolute low? Probably not. Probably not. But I will also have a higher probability that I don't get caught on the wrong side. I also have the probability that if rates break out and we do sell off to 3,500, I still have dry powder to jump in on great prices. So don't get too scared. As I told you in last week's videos, when the market was going down and gold was breaking down and silver was breaking down, I was telling you, yeah, we can go lower, but we'll go much higher mid to long term. And these were the reasons why. Again, hit the subscribe button so you don't miss these videos. Now I'm also saying, don't get too freaked out and greedy about the rebound. We've seen twice this year already what happens if you try to jump in too early, which is you ended up unfortunately on the losing side because we went much lower. The candle of this week shows us we're not done yet with the correction. Maybe short term rebound will go a little further, would make sense, right? Get people back sucked into gold, and then we roll over again. We will see what happens. First off, I wish you a great weekend. And if you're a Knicks fan like me, hopefully this will be one that we won't forget ever. Let's go Knicks.